welcome to another episode of Let's Talk Death Care with myself, Babes with Death Care. So with the hype around unclaimed benefits and a lot of people wanting to know what are unclaimed benefits and how they can access them, we have had the pleasure of inviting Takalani, who is from the FSCA and who will be engaging us on what happens around retirement funds. Takalani, welcome.
Thank you so much for the invitation, Tagisile. And I am more than excited to get into this topic of unclaimed benefits and to address your viewers and your listeners on what the role of the FSCA is.
Absolutely. Like I said, every time we hear the word FSCA, we cringe and thinking, ooh, here comes another fine. But I think what's more exciting when I reached out to you is that there are so many components and departments within the FSCA, and I don't feel like a lot of us fully understand the role of the FSCA, and I thought this would be a great opportunity, to engage more around the role of the FSCA, as well as, of course, the issue of unclaimed benefits.
Yeah.
So can you tell us a little bit more about who is the FSCA and what is the role of the FSCA in this financial industry?
So the FSCA actually started as the Financial Services Board. So some people might know it as the Financial Services Board.
FSB, yes.
Yes. And in 2018, it was then called the Financial Sector Conduct Authority. What was decided in terms of regulation in the financial sector was to have a regulator that would only focus on conduct-related matters. So how do you actually go about doing your business?
Yes.
Then there would be a regulator that would deal with your prudential-related matters, your liquidity requirements and all of that. So we split. At the time it was called Twin Peaks. Now we've got Two-Pot, but now that was Twin Peaks.
All right.
So you had the one side, which is then managed by the Prudential Authority, which is the South African Reserve Bank that manages that side, and then you have the Financial Sector Conduct Authority, which is then the market conduct regulator.
Yes.
But it is still the financial sector. So we are talking about the banking sector, insurance, your collective investment schemes, your retirement funds, and your funeral partners, any of those financial services that you are given, whether it's advice or in actual fact being provided a product, that is what we regulate. And then even including the banking sector now, because it's all financial services, it's just that we look after the conduct side. So if you come and you say, look, I don't like the way that this person sold me this product,
Yes.
right?
Yes.
That's the FSCA.
All right.
Right, and then we look also at what type of product it would be, but essentially if you're saying, I bought an insurance product, this person did not disclose the following things, that's where the financial sector then looks at, is this product, was this person's advice in line with what is required? So we would look at that.
And thank you for that, and I'm glad you mentioned that because you get that quite a lot, when people feel like the product was not explained to them properly. And in just what you said, I want to know, because for me, in what you said, it very much seems like you are very much consumer focused. You are, an advocate for the consumer. So what do, ordinary consumers or customers come to the FSCA for? On what level would they be engaging with the FSCA?
So in terms of the role for the FSCA, we make sure that there is proper regulation in place, there are proper laws in place that our regulated entities must adhere to. So when you've got a complaint, the Act structures that these are the things that you were required to do, right? As a financial services provider, these were the things that you were required to do. And if you have a complaint, we've got different ombudsmen that would then deal with the complaint separately. But the FSCA would then still look at, did you contravene a law? So did you, in your conduct, contravene any laws that we actually look after? We won't adjudicate the complaint, so we won't say, yes, you're right, no, you're wrong.
You're wrong, yes.
This is how much compensation you get for that. That is dealt with by an ombudsman. So whether it's the pension fund office of the pension fund adjudicator, whether it is the financial the financial services providers ombudsman, it will then be dealt with in that fashion. But we will then also look at, were there any laws that were actually contravened in the process of this person complaining? So people come to us with, I believe, and I suspect that someone has broken a law, right? I believe that someone has done something that they're not supposed to. This is my complaint. And then we say to them, okay, we can deal with this regulatory aspect of your complaint.
Yes.
But in order for you to get compensation or to get someone to adjudicate over your complaint, this is the ombudsman that you need to go to. So that is how we would look at it. But our main role would be supervisory in nature. So we are looking at, we would supervise and look at those entities on a regular basis, whether it is evaluating whether they're submitting their returns, so financial statements, any of their compliance reports, any of their, in a pension fund space, you've got valuation reports and all of these other things that funds are required to submit. So we would look at the supervisory nature, and that would be our day-to-day function, making sure that the sector is actually being
properly regulated.
Thank
you so much for that. And the reason why I asked these questions is that there have been a lot of questions, particularly on my TikTok platform, with regards to financial services. Like, number one, people want to know if my funeral home is not underwritten, is that breaking the law? Should I continue now, working with this funeral home? If the life insurance space or product was not properly explained to me, like, there's a term cover and there's a whole of life cover. If I was just given a product and it's only now that I'm realizing that I've got a term cover, who do I take it up with?
Yes.
So it's all of those questions, and that is why I was, wanting to understand properly to say, what do people come to the FSCA for? And thank you for that regulation. So the last question before we get into the retirement funds. So like you were saying that you act on the regulation role. So if I see, let's say, I've had an experience with an unregistered financial service provider, or I've taken a product which was not regulated, but according to the terms and conditions of the FSCA, it's supposed to be regulated. Do I then come to the FSCA and say, look?
That is definitely you come to the FSCA. Definitely you come to the FSCA. Yeah. You'll see that we even issue public warnings. Right? Yeah. We will even issue a warning to say, listen, this person is not registered to do what they're doing. We would have investigated it, right? Based on, and it happens where, we get a tip off and someone comes through and says, look, I'm trying to claim and this person is refusing to, and I want you to investigate. And when we investigate, we find this person isn't even registered to do what they're doing. And we will issue a warning, but over and above that then, because remember that also enters into it being fraud. Yes. And criminal, so we would actually even involve investigating officers as well, because remember there's also that someone has taken money, so we also need to establish where did those monies go. And a lot of our investigations also work together with crime intelligence, and also your South African Police Service to open cases and all of those things and get these matters prosecuted, because you also want to make sure that those people don't make it back into the financial sector, over and above debarring people, levying penalties where people are registered but they broke the law. Then you have got the power to say, because you are my regulated entity and you fall under my law, this is the sanction that you get. It becomes a little bit more difficult when the person is unregistered, and hence what you can do is say, look, I'm warning you, but also I will work with prosecuting authorities to make sure that you are held accountable for what you've done. So it's very important to check any product that you buy, that it is duly registered. And you can always, contact the FSCA and say, look, I want to know whether my product is registered or not. And whether this person who's, saying they're a key individual or a member, whether they are registered or not as well.
And thank you so much for that, because that was my follow-up question to ask as to where do people check, And, I'm really enjoying this conversation, because you're coming from an education perspective and you are opening us to understand that you're not just the big guy with the big shovel and just hitting. And then let's get to, the business of the day.
Yes.
What are retirement funds? Is retirement fund and pension fund the same thing? And I'm asking this question because I want the viewers or the consumers to understand, the difference between the two, if there is any, if there is not, to really understand what are retirement funds.
So I'm gonna unpack it the way I usually do to make sure that the distinction and the differences are noted quite nicely. So people use the word retirement fund to describe all sort of arrangements or pension fund organizations that are geared towards saving for when you retire. So when you have reached retirement age. So you can name a fund anything. You could actually say Thabisile Retirement Fund, or you could say Thabisile Pension Fund, you could say Thabisile Provident Fund. As long as when we open the rules of that fund, which is what governs, it's almost like the constitution of that particular fund, we then look at what type of benefits does it provide. Now, a retirement fund can only be that you are saving for the purposes of retirement.
Yes.
It can't be that we're saving for a stock fail. That is not a retirement fund. We are saving for in the event of a death. That is not a retirement fund.
Yes.
It can provide other benefits, but its primary objective must be to provide retirement fund savings. So there was a difference between a pension fund and a provident fund, in that when you retire, you would only be allowed to take 1/3 of your benefit in cash.
Yes.
And the rest of it you'd have to buy a pension that would pay you out, a retirement, an annuity that would pay you out on a monthly basis. That has since changed. So there is actually no difference between, for a provident fund, you would only be allowed to, you could take out everything in cash.
Okay.
But that has since changed. And there is essentially no difference between a pension and a provident fund, because in a provident fund now, even when you retire, you are only entitled to taking 1/3. So there isn't any difference anymore. But when you hear the word retirement, pension, or provident, what we're talking about is a scheme or an arrangement or an organization that its sole objective is for you to save for when you retire.
For when you retire.
Yes.
And I'm glad you mentioned that, because in most cases, and I think I mentioned this to you when we are, having a conversation, that, we are from the townships. All we know is that, but what are these monies? A lot of people don't know. I just know, and that's why when someone passes on, we just say, we are going to ask Takalani. She's the HRS and FSCA. She must know.
Yes.
And I think that's where the problem starts, because if people don't even know who sits with the monies, how do they claim from those funds? And I think a big portion to that is exactly what you said. People are not comfortable talking about death, and if you're not comfortable, then obviously the planning around that will not, be accurate. So I want us to go back in terms of, so that the employees sign up for the retirement fund through their employers. An employee can never say, no, I think our Takalani's fund is nice, can I go and sign up with them? Or it is always on the onus of the employer.
So you do have funds where, so number one is definitely through occupation. But you can get an instance where someone belongs to a union, and that union has established a fund. And so what you can then have is the employer saying, as part of our bargaining arrangement, I will allow some of my members, or those who want to, that belong to the union, to belong to the union's fund, right? And then in that arrangement, you would then have a selection as an employee. So I work at the FSCA, but my union is, I'm just going to try and find one that is, it's CEU. It must have a U at the end, union. And CEU has got a fund, so the employer then says you can either join the FSCA pension fund, or you can join CEU pension, the arrangement that they've got. Usually you can always transfer back to the employer's one, so you would have a choice in between.
Okay.
But I'm not allowed to be at the FSCA and then say I'm going to be in the South African Reserve Bank's pension fund, for instance, because their rules would say who is eligible to be in there. And eligibility will then be determined primarily on occupation. So it's not we don't have one of those systems in South Africa where you can choose which fund you want to be in, other than if you want to be in a retirement annuity, because that's on your own and not connected to your employer. You also get funds that are bargaining council funds. So there isn't a main employer, but you get your private security sector fund,
yes.
you get your contract cleaning, you get electrical. So different sectors could set up in a collective agreement manner and say, everybody in this particular sector, we are going to collectively bargain for you and come up with benefits that you want. So what is the minimum wage in this sector?
Yes.
What is the sick pay leave? What is the holiday fund? And then also include a provident fund as part of that. And then you would find that there's a electrical industry pension fund or a private security sector provident.
Yes.
So you could have that type of fund as well. I've already described you could have a union fund, but mainly the majority, 99% of the funds that we've got are through occupation. And through occupation, whether it's that you're in a particular sector or you are just with that employer, you would then belong to a fund.
Thank you so much for that. And that leads me to my next question, which is around the issue of, so when you get registered to that fund, or rather, let me start with this question. By law, after how long am I supposed to belong to a particular fund? Because I know some companies don't register their people. So after how long am I expected to get such benefits? And if I'm not getting those benefits, how do I structure the conversation with the company to say I want to be registered? Or it is the company that should come to me as an employee and say, look, this is the fund that we're working with, and we need to register you with this fund.
So you would have to look at, again, eligibility requirements in that fund. And usually because it's through occupation, an employer could say, look, I've got a very strict, say, probation period of 3 months. And I know it happens in some sectors. And I'm not comfortable registering someone until they are permanently employed with me.
Yes.
So you might find for the first 3 months, you're not registered, and then you become registered. The difficulty for a fund in knowing whether someone is supposed to be registered or not is that the employer sits on one side and gives the fund information.
Yes.
So your fund is run by an administrator somewhere who is not involved in your day-to-day operations as an employer. So you could send a list of 15 people. I'm none the wiser as an administrator that you've actually got 20 people, right? So on the other side, an employee could be receiving a pay slip with a deduction saying, you're contributing to a provident fund. But on the other side, the administrator or the fund is actually not receiving that contribution. And they come to find out when they leave employment and they want to go claim their money. Because they've heard from somebody, a colleague, that this is the fund where we belong to or whatever. Or benefit statements are being issued to other people that belong in the fund and they're not getting one, and they say, but why? And they go check and they find in actual fact their employer hasn't registered them. So it does happen, but it's mainly due to that inability to completely link up with the employer system to verify that these are the employees you have on your records versus my employees on my side. In that instance, the employer would still be liable for those contributions, even though they didn't register the person. Because remember what I said about the rules saying by law I was eligible to be a member because I was employed, and therefore as an employer you have done something wrong, and so you could still complain about that, and it is fraud and it is actually theft for you to have then gone and deducted those contributions from me and not then have given them over to the pension fund. So there is recourse for you as a member who wasn't registered, but it's how quickly do you pick it up, that you haven't. And even when you're employed, you could be registered and you start off well, and then somewhere along the line your employer faces cash flow problems or just decides they don't want to contribute, and they don't contribute for you for 6 months, and then they start again on another after the 6 months period. So the challenge is, how do you then find out in time that your employer is not contributing? And that is something that we want funds to, on a month-to-month basis, you will know
a statement
if you didn't pay your account. If you didn't pay those big retail stores. I don't want to say which
They
one.
must try gym. Gym will let you know you will not even get into gym first day. Like if my gym is not paid, if my
you're not going to
membership
get in. You know, if your subscription TV thing is not paid, they will cut you off. You know, they will not. So I think that the challenge, especially for the retirement fund industry, and I think it's, sometimes I say it's like we think we work as if we're already too old. We're in retirement. We're just not.
The retirement fund is retiring.
The retirement fund is retiring. But the technology really needs to be advanced, to be more real time, more on time with employers and what you can actually do. So the minute my employer doesn't contribute, I should know.
True.
Because my time for taking action starts running, right? And when I actually get to take action. So you can't lodge a complaint 15 years down the line as a member. There's a period of time, there's prescription that applies, a 3-year period for you to do so. So the sooner I know, the better. If my employer is going through financial difficulty, they might close down. Right?
Yeah.
And it becomes that much harder to get the money back. So if I know in the first month of my employer not contributing, that works. If when I join the fund, the expectation is I'm going to get a certificate that says you are now a member of this fund, that gives me comfort, right? And it says, look, I can go onto this website and check any other day whether my contributions were received or not. And a lot of funds, unfortunately, aren't there yet.
Sure. That's a lot of unpacking that just opened up my mind. because there's so much sense and truth in what you're saying, simply because, like I said, a lot of people don't even know which funds they're registered with.
Exactly.
They don't even know their funds, but they're actively paying these funds on a monthly basis. They don't even know the claims process, which then becomes a problem and ties to what we'll be speaking about now, which is the issue of unclaimed benefits.
Yeah. It's very passive. It's a very, if you think about how much we engage, say, with your bank statement, or in your banking, it's a lot more frequent. And obviously we don't want people going into their retirement fund every single day trying to check what is happening. But you need to be actively managing what am I going to be doing at retirement. And not when you are, 5 years to retirement.
True.
You should know what's happening in your fund, because for many South Africans, for the majority of South Africans, that is the only savings they have.
True.
Right? So for you not to, be eagle eye on it doesn't make sense, because you need to know who's managing your money. You need to know how they're managing your money. You need to know what the rules say. You need to know when are you eligible to retire. What are your rights within the fund? Can you get minutes to see what the trustees are discussing?
True.
Can you get the financials? As a member, you're actually entitled to those things. You can get it to see what is actually happening in your fund. So you need to be a lot more active. You must almost treat it like, I know a lot of people are more active with Stokvels. They know a lot more about what is happening there.
Because Stokvels come for you if you're okay with that. They come for you. Whenever you're taking you out.
And it's more frequent because they know they're going to get money out. And here, if you think about that, there's a cumulative nature in it, that, you are looking forward to resting, and saying this is how much money I have. That is what you really should be focused on. To say, I don't want to see myself not be able to afford, being able to retire. So we really, and we've got a consumer education department within the FSCA, so it is something that we focus on. There's a dedicated My FSCA Money website where you can look at all of these topics and see, but engage with your fund a lot more.
Absolutely.
They're there, the administrators, the retirement, the trustees, even your employer is there to answer those questions, and you need more information than getting one benefit statement a year. You need to know what is happening. You need to know who's representing you.
Absolutely, because a lot of people, like you're saying, leave it up to later when someone feels like, you know what, this place is toxic, I'm tired now. I cannot wait to go on retirement.
Yes.
Let me check how much I have. They only check then when they are triggered by something that makes them want to leave.
Yeah.
All these years, they don't know how that fund is growing and what the finances around that fund look like. But thank you so much for that. And I want I'm not sure if it's fair to structure this question in this sense because it's quite broad.
Okay.
What are unclaimed benefits?
Unclaimed benefits are monies that were entitled to an individual from a product or an organization or a scheme that were not claimed. That's it. It's
Simple
as
that.
simple as that. It is a benefit that remains unclaimed. And in different sectors, there's a definition or a category
Yes.
which you then fit into. So if I relate it to retirement funds, which is one of the more advanced sectors that have actually got a definition of what an unclaimed benefit is if you left employment today and you do not claim your money within 24 months of you leaving and being entitled to a benefit from the fund, you then become unclaimed. Right? You become an unclaimed benefit within the fund. So your money doesn't disappear or anything like that, but you then fall into that category that the fund must then look at you and say, okay, now actively we are treating this benefit as unclaimed. What do we do for our unclaimed benefits?
Yes.
We do 1, 2, 3, 4, 5. They're charged differently in terms of fees because there's no active management, there's no contributions coming in. So it's a classification within the fund. In your banking sector, there isn't a definition just yet, but they've got perhaps accounts that are not active for a certain period of time. But the issue is there isn't a standard definition. In your insurance space, you can imagine if someone took out not in those days, it's still there, endowment policy, right? And you said, I'm taking it out for 10 years.
Yes.
You don't come after the 10 years. That means it's unclaimed because technically we were meant to pay you out of it served its purpose.
Yes.
And we were meant to come and you were meant to come. So you could have dividends from shares, right?
Yes.
That weren't paid out. Those could definitely be unclaimed. So even in your retirement immunity space, I mean, if someone took out a policy in 1955, okay, we started in 1956, so 1955. And it is now 60 years down the line, 70 years down the line. You can imagine you're starting to think maybe that person isn't alive anymore to come and claim their benefit.
This money.
Or they've already reached retirement. Why haven't they come to claim?
Yes.
So you now have an unclaimed policy within your retirement fund space. So you've got different ways in which you can categorize it in the different financial sectors. But essentially, once you've reached that category, once you meet that definition, you are then unclaimed. In the retirement fund space, it's 24 months.
And is there an expiration date to these funds? Is there a date where you forfeit these funds, maybe over a number of years or over a number of months? And how is that communicated to consumers?
Yeah, the communication part would be difficult because you're unclaimed because we can't find you. Right? We had contact with you, and I think that's where we want people. I want to just go back to we want people to be actively engaged in what is happening.
Yes.
Because we would expect the main source of contact is your employer. Right?
Yeah.
Now you can imagine if your employer is closed down, where does the fund go to get information?
Yes.
The fund gets information on you in relation to your contributions.
Yes.
They don't get everything about
every
you,
detail,
right?
yeah.
And at least they never used to. So up until 2001, there wasn't a prescribed minimum information on what your employer must give. So we only introduced it in 2001 to say you must have a date of birth, you must have name, surname, you must have, but even that is limited. In 2023 now, we also introduced saying get email addresses, get postal addresses, so that you have direct contact with the member. Because if you lose contact with the employer,
you've lost that relationship with the person.
You've lost that relationship with the person, or you could say you're looking for a file, but details change as well. People move. If you think about it, in the olden days, people used to come to Gauteng for work.
Yeah.
They gave incorrect details, not just on where they live, but their names as well, so they could gain employment. So there are a lot of different factors to how a benefit could become unclaimed, but there is no expiry date. The only issue becomes there is management of this benefit that is happening, right? So every month we're adding interest on, or it's staying on our system, or and that means the administrator is then taking a fee. Now you can imagine if your amount is small, and we do have approximately 20-30% of the benefits are less than 100-150 rand. So some of them are, it's interest that with
50,000 or 150 rand.
150 rand. So what could have
100
happened?
rand and a 50 rand.
150 rand. And I think this is the problem. People hear 42 billion, and they're like, okay, when I go claim,
I've got millions.
I've got millions. And it's not like that. So if we look at the numbers in a fund, you will find it's almost an inverted triangle. You will find most of the benefits are at the bottom. Most of the benefits are below 5,000 rand. Then you could actually even go to 1,000 rand. Most of them are below that, which creates a problem for the fund, because if they want to go and employ Takalani to look for people, right, to trace you, then because it's not. Yes, and I think people have this perhaps imagination that the fund must do everything on its behalf with endless amounts of resources. The fund only receives contributions on behalf of members. They're not a profit-making organization in the sense that they are putting aside some money that is there for a rainy day. That money belongs to you as a member because it's investment return that grows your money. So if we have to use active members' money to go look for Takalani that left her money, what happens to the person who's contributing every single month?
Probably get charged more.
Exactly, right?
And
Their
you
money is
can't
getting
carry-
diminished for somebody else's. So the fund has to balance that. And then what the practice would be, I'm going to employ someone, because it's not my primary objective, right, to look for people. My primary objective is to pay you. So I'm now going to maybe employ someone to look for you. So I will initially do maybe some desktop work. I'll start seeing by what do I have on file, is the employer still there, because we don't want to incur costs. But if there are costs to be incurred, you then have to look at, is it worth it for me to go and get someone who will charge, say, 250 rand on a 500 rand benefit to find this person?
True.
And so some funds wait for that benefit to be big enough for them to absorb that cost. But unfortunately, the amount could be so small that you're not even earning enough interest. Say your amount is 150, and the administration fee is 8 rand or 10 rand a month, right? That money is going to be gone. So unfortunately, we are seeing a trend in the sense that the smaller amounts, the much, much smaller amounts, are being eroded by costs because people are taking too long to come forward.
So, and I'm glad you're touching on this, because this is the part I want to get to. Could it be that some of the people that are on the register of unclaimed benefits, that their names, align with having a benefit, end up not getting that benefit because, their names were initially listed there, but due to these costs, there were no monies anymore. That's why they are told, we have no monies for you.
So they will still keep you on their records. You will then be told, yes, you did have a benefit, but unfortunately, it has now been eroded due to costs. So you will still find your name is there. But when you contact the employer or the fund, they're then going to have to advise you that unfortunately, because we could not find you, and this is what we tried to do to find you, right? Your benefit was then eroded by costs. So that is a very real reality. I don't want people to walk away with, you know what, let me just leave my money there, for forever and a day. Because you technically, are saying manage my money. So
Yes.
like I said, the money in the fund belongs to members in the fund. It is not that, there's
An extra.
an extra that should be made.
Yes.
Everything, the fund's assets are the contributions that come in, right? And its liabilities are the monies that it must pay out.
Yes.
That it must give to those people who it's their share of the fund. So technically everybody's got a share in the fund, and if all of that is paid out, the fund doesn't have any more money. That's how it should be. You shouldn't have any surpluses like we had a long time ago. Then they weren't paying out the full benefit.
Oh.
But now we are paying, we then introduced the law to say you must pay out
the full
the
benefit.
full benefit. So that practice is no longer there. So if you leave now, you get your full benefit, and another member that has stayed should not then have to bear the costs of members that have left.
Ooh. Yeah, just this, just on this, because there's been a lot, like I said, there's been a lot of people who come back and say, well, the form picked me up that I've got a certain benefit, but now it's not showing. But one of the most interesting aspects you spoke to around the administration, very tricky, this one. How do we know a proper tracing company? Are tracing company regulated by the FSCA? And if they are, what should we look for? Because I personally, on my own capacity, have received a number of emails from this lady in the UK who's left me 800.
Oh, your
800
inheritance.
euros.
Your aunt.
My aunt that I've never even known from the UK. So I want, and some people actually do fall for that.
They do.
That's the sad part about it. So I want to get an understanding of how do we identify a proper tracing company and what is its role in terms of.
If there was a question for the day that I could just end with and begin with, this is it. Thank you so much for that, because it's a real problem. It's a real problem. And I think the issue is, one, I feel like as South Africans, we believe that we need to pay for things.
Yeah.
So we have to, if you want to get something, you have to pay for it to get done. Even if it's entitled. You won't believe how many times I've helped someone and they say, no, I'll thank you. And I'm like, no, I don't need to. I don't need to be thanked. It's my job for me to actually help you, and for you to get this money, you're entitled to it. Tracing agents are not regulated by the FSCA, right?
Okay.
They are contracted with they would be registered with, say, the Debtors Council, because they are looking for debt or whatever, but some of them aren't. But they don't necessarily need to be registered at the moment with us, because they're not performing a financial service, in the sense that they're not giving advice.
Okay.
They're not saying to somebody, put your money here, put your money there. They're not selling a product, right? They're not saying to somebody, we are going to give you your retirement fund money, this is the product that we're selling. So that's the difficulty, that's the loophole that we've seen, is to say, should we actually govern them? So that's one of the key recommendations that has come out of our unclaimed benefits paper that we published last year, is to say, should we actually be governing tracing agents? Because people want to know what you're allowed to do and what you're not allowed to do.
Yes.
You must provide some sort of structure, and because it's becoming more and more prominent, it's something that we are reviewing as to whether we want to register them or not. But a tracing agent at the moment would be contracted with the fund. So if someone comes to you and says, I've got a benefit for you, that you get this email, you could ask a few questions. Which fund are you saying is paying me, right? Because you know where you worked. So if someone comes to you and says, I'm paying you from the FSB, and you know you've never worked there, then chances are that that is not your benefit, right? If it's a retirement fund benefit. Number two, you should not be paying any money at all. Any money at all to a tracing agent. Remember I said the fund then says, they make the decision to say, we want to go trace these people.
Yes.
And for that, we are going to pay you. If it's a trace of you just giving us a number and we will do the rest, we'll pay 5 rand. If it is that we want you to go and get this person to complete documents, then we will pay you 100 rand. If we want you to physically go and find this person, investigate their circumstances, because perhaps it's a distribution of a death benefit and they're different family members. We want you to interview them, gather information for us. We will then pay you 500 rand, say for instance. But the fund makes that decision. So it is not Takalani deciding, I want to start a tracing company, and I come to you and I say, listen, I'm going to go find your benefits for you. That is not the tracing companies that we are talking about.
Oh, Takalani, please,
yes.
Can I disturb you here?
Yeah.
I want to know, are you Because the reason why I'm asking this is that we had a scenario where a cousin of mine was, located by this fund tracing agents.
Yes.
And they said, we found your fund, but with the money that you're getting, we're entitled to a certain percentage.
No, not allowed.
Okay.
Not allowed. So when the benefit is going to be paid out, the fund will deduct it from your benefit. You pay no upfront fees at all. You do not pay. If someone says to you, in order for you to get this benefit, and I did see there was another scam that we then picked up on WhatsApp, and we warned the public about as well with that. But you should not and do not pay anyone any money. We unfortunately pick it up very late. When someone and they'll string you along. It's and they're there for 6 months. And they tell you wait, it's going to take about 3 months for the money to come out. Again, as South Africans, we are used to we must wait, there will be pain and suffering for this money. And maybe that's something that we need to look at as an industry to say, is it taking that long? Even if it is a legitimate payment, is it taking so long that people give up, or they're used to the fact that it's going to take long to pay out? Because when they speak to us as a regulator, they say, no, give us all the documents and within 14 days you'll be paid your money. So when you say to me, it took me 3 months, I'm on that can't be happening. That shouldn't be happening, because it's meant to be that quick. As soon as I receive all the documents, I should be just verifying it and paying you out. But your tracing agents, as I said, the fund has a list that they give to the tracing agent, and they say, these are the people I'm looking for. So you must say to that tracing agent, I'm happy you've contacted me, but here's my email address, or here are my details. I want something in writing. I want to know which fund is paying me. That's all I want to know. Sure. If they can't give you that, if they can't tell you who it is that has contracted them, then they are not a legitimate tracing agent.
Thank you so much for that. And with just that being said, the other problem is people are struggling with understanding how long are these funds supposed to be paid. How long is the process of claiming your retirement fund supposed to take? When you are alive and when it is a death benefit, when you are no longer there and it's the beneficiaries that are claiming from the fund.
Like I said, from our experience with the administrators, when you have submitted all of your documents, it is 14 working days for it to be paid out.
2 weeks?
Yeah.
Takalani, I've got people sitting on 3 years.
No. Okay, well, I want to say it's not possible. I want to say that I would like to look at that specific case to see what the problem is. But, so let's look at a process. You leave work, right? We're coming up on the end of August. You leave as at end of August. The law says that you're entitled to that last contribution, obviously because it's going to be deducted from your payslip because it was the last month that you worked. Your employer has up until the 7th of the next month to make the contribution to the fund. The fund will then allocate that money to you. They will calculate your investment return, and then they are ready to pay you out. But they then need, obviously, for you to confirm that you've left employment. The employer must confirm, so you sign documents, they sign documents. In fact, these days it's also even done online by some funds, and you get paid out. So outside of that administrative process of the 7 working days and your employer having up until the 15th as well to give the schedule to say, these are the people I contributed for. Outside of that, once that money is allocated, there's administratively nothing prohibiting them from paying you. So presumably by the end of the next month, if you take into account that 15th of the month, and you've submitted your documents, in those 14 working days to the end of the month, by the end of the next month, you should be paid.
Sure. So this is when you're alive. So in a case where it is your beneficiaries that are claiming, I understand there's some investigations to be done. Yes. Do they need to verify that it's the right beneficiaries or stuff? But in terms of, your experience in the industry, normally how long is that process supposed to take?
So the process by law should not exceed 12 months. By law. you are given 12 months to finalize this process. The issue becomes, if you as a member when you were alive did not give the fund good guidance in terms of where should they start to even distribute your benefit. By law, they must look for dependents, financial dependents, a spouse, adopted child. They must look for someone who, on a month-to-month basis, and this becomes very controversial, right? They must look for someone who was financially dependent on you, right? A fund will issue you what they call a nomination form. So you must then nominate, not give, nominate who you would like to receive money in the event of your death. So you write your percentages and you write the relationship with this person. Unfortunately, what funds also don't do in some instances in the nomination forms that I've seen is they don't then say, give us contact details of this person right now, right? I've seen one, from our own experience with funeral, where they do say, look, give us the contact details of this person and the ID number and where they live so that we can contact them as well. But in the forms that I've seen for most of the funds in the retirement fund space, they don't do that. They don't say contact details. Now you can imagine if it's that, you've got a small child, I've got kids as well. If it is that you can't write a child's contact details, right? You can't write that child number.
Obviously they don't have a phone.
Yes. So we need just a little bit more, because it's just a form that puts, and I think what is needed is a bit more allowance for in-depth, someone to write a story, to say this is my relationship with this person, almost a small will, but related only to the pension fund. Not just a form, because a form doesn't give you a real, explanation of what is happening in this person's life. The complication becomes that now the fund needs to go and investigate the financial dependency of this person, right? Sure. The fund needs to go and establish whether you were actually a dependent in line with what is defined, So yes, you could have been an adopted child. Yes, you could have been a spouse, but it is not the same as I'm a spouse and therefore I'm entitled. It doesn't work like that. It needs to be that I'm a spouse and yes, I was financially dependent and here are the kids. So as a spouse, you could then be deemed to not be as financially dependent as the kids.
Yes.
So your share doesn't become an automatic 50%. And people, think that that's how it works. It works on financial dependency.
Put bold letters on that statement you just said? Because people, that's the other confusion. People think that the retirement or the pension fund is administered just like the Marriage Act administers estates to say, well, I have 50%.
Yeah.
It does not work that way.
It does not work that way at all. And so I could give you thousands of examples where you could have, money going to a grandmother because the person was supporting their grandmother. If you had extramarital. I wanted to ask that.
I was getting to
it. Money could go to those people as well. Now, when you don't write it, when you don't put it on your nomination form, the only thing that you're guaranteeing the people who are relying on you is a delay. Sure. That's the only thing you're guaranteeing them. Because believe me, people know that you have passed on. And all they're going to do is go to the fund or go to the employer and say, I'm also a beneficiary. I want to know what's happening with this person's money. Now the fund has got the added responsibility of them verifying that person.
Yes.
And we've had examples where people then say to the wife, you go find a girlfriend. And they're like, okay, but we weren't like friends when this person was alive. Where do I find this person? But that the reality is the fund is saying to you, we can't give you this money because we actually don't know her situation. We don't know whether we have to give her 30% or an extra 40% of this money because maybe she was actually that much more dependent on this person than you were as a spouse. So if you don't, and people don't want to write it because then they think, my wife is going to find this form and I don't want. Unfortunately, all you're guaranteeing is that your children and the people that were actually dependent on you are now faced with a delay because then no money is going to be distributed until we've sorted this out. You can imagine if the family then says, I don't know this child. It's not, my son did not have.
Yeah,
this
because
is not,
DNA comes to.
some funds have actually had to pay for DNA tests because the benefit is that big and you can't afford to make a mistake. Remember, once I've distributed the money, I can't go back and take Tabisile's money. Again, remember how a fund operates. I can't go back and take Tabisile's money to pay my mistake from the other fund. Yes, I've got insurance for that, you know, if I make a mistake. But I also still have to watch out for, you know, I have to make the right decision. So that's why sometimes it takes long.
Sure.
We've got cases, yes, that have taken longer than the 12 months. But the issue is the fund can legitimately say, these are my struggles. Family squabbles. I mean, I couldn't believe it when the fund gave us that example, and I said, give me the case. And I saw it for myself. They are arguing, they will not allow the money to be paid out to anybody. Nobody. So it is very, very difficult. Very, very difficult. In the death cases, it's extremely difficult. If you don't point them in the right direction, because like I said, all you're guaranteeing them is a delay. So do the right thing when you are still alive to protect them in the way that, I'm not saying don't have a, I'm not here for that. I'm saying if you do, make sure that you prevent the delay. Prevent the delay. Point them in the right direction, let the benefit be paid out quickly. Whether someone, if someone then decides to challenge it, that's something different. But let it not be because you did not disclose.
Sure.
Because that just, it guarantees, and the houses will be taken, you know, because people can't pay for things. Because that money is there for you to quickly be able to cover because you were perhaps the breadwinner in the family.
True.
So don't then leave them in more financial strain than what you intended by you not being truthful on those nominations.
Sure. Takalani, thank you so much. We've run out of time, but
have we run out of time?
Yes, but I'm definitely going to call you for
my.
a part 2. Please make time for a part 2. I feel like we've got a lot to unpack. We definitely need a part 2.
Wow.
Just to unpack on, you know, the pension fund space, because you know, some of the things that you are saying now, a lot of people are sitting at home and they have absolutely no idea.
Yeah.
And there was a time I was having a conversation with an attorney, and she did state that girlfriends do come for this money, hey?
They do.
And people are like, yeah, but what's the number? You can't say that. They're relatively low, so it's not a thing.
No.
You can't even quantify it. Give us the numbers. It's not a huge thing.
No. Look, it's unfortunately, if you look at, even if you look at the way that we're structured in South Africa, if you look at the fact that, you know, someone has a home in a rural area and then comes to live here, you find in certain sectors, whether it's construction or mining,
Especially mining.
Especially, okay, yeah, okay. that is something that is prevalent for them. They are used to it. To an extent where it just feels, just rather say it's okay, but just make sure that you do the following, because the funds then, you know, sit back and say, we can't sort it out because the grandmother is refusing that this person was a second wife or was a, so we can't do anything, we can't pay out this child's benefit. And that's what I'm saying is, all you're guaranteeing them is that everything that you have worked for and what you wanted to provide for them and protect them for in the event of your death is then going to take that much longer.
The viewers
went by way too quickly.
Absolutely. So yeah, we'll have another session. Thank you for sharing so much information and so much knowledge, and we definitely cannot wait for part 2.
All right. Thank you so much for the invitation. And I avail myself anytime for part 2. Thank you so much.
Thank you.